Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Now let's take a look at the gold market. Well guys, the gold market in general confirms our suggestions that we have made a couple of weeks ago when we said that as market doesn't have sufficient physical demand on the spot market, any rally that could happen will be stand under question. Because the markets that has no support, no fuel from the real purchases is doomed. And that is what we see on the gold market. Here I just would like to mention the single issue, despite beyond the moments that you probably already know concerning the supportive United States dollar situation that now we have and now we see in the fundamental data from the United States economy. That I mean the earnings report from the companies, recent data on unemployment, on the gross domestic product, on the consumption and retail sales, on inflation. By the way, in today's update on the forex market we mentioned that the major reason why all markets across the board have shown the plunge yesterday is significant rise in the wages in the United States. And you know that the wages in the direct indicator on the inflation and the money supply in the economy, and that is really big stimulus for Fed to show some movement in the interest rates. That is the supportive factor for the hawkish policy on the interest rates. That's why this significantly increased the perspective of possible reaction from the Fed. We now do not speak about the possible really rate hiking, but the reaction from the Fed on this moment. And that reaction really could follow even on the Jackson Hole speech that should happen in August. But this moment we have mentioned in the update on the forex market. Here I would like to mention another moment, is that by the traders, spot traders in China, the demand on the coins, on the treasury coins, has fell for the 40% in the current year. The spot demand for the jewelry and other individual goods, individual consumption on the spot market also has fell significantly. And that is really a significant impact on the gold market. And we think that we do not know yet what will happen in the strategical moments on the gold, but if market will continue this move down, currently this action stands absolutely in a row with the long-term bearish patterns that have been formed, and we have discussed it week by week in our weekly updates, that have been formed on the monthly chart, on the weekly chart. This drop is absolutely supportive for the long-term bearish view on the gold market. Speaking on the shorter perspective, we think that the next destination point for the gold market, the short-term target, stands at 1270, just $14 lower. That's the completion point of this A, B, C top D pattern. That will be an area of the 618 support. That will be the next target. Why we think that market should reach it? First of all, recall what we speak about these fluctuations of the gold market. First reaction was on the oversold, reasonable bounce. Second reaction was the second test of the 50% support. And we said, well, market has formed bullish engulfing and it has to continue move either to the 1325 or probably it will fail and turn to the downside. And that's really has happened. That we have said by looking at the 4-hour time frame chart. We said that this action and the bounce down from this resistance is absolutely bearish moment, that it shows the inability of the gold market to continue move higher. right to the next target. And as a result of this action, market has moved below the weekly pivot point, pivot support 1. And finally, market has erased, as you can see, this bullish engulfing pattern. That was our criteria of the continuation of the bear trend. That really has happened. I think that this action, in fact, will play some bigger, larger role in the overall action on the weekly time frame chart. But currently, guys, I do not see much sense to watch in the intraday charts because it's almost useless on the eve of non-farm payrolls release, and currently I do not think that we should take any positions right now. Well, we just need to wait what will happen on non-farm payrolls release, and I will not exclude that market really could fly right to this target, especially if the data will be positive and supportive for the US dollar. You know that the Reuters poll and consensus suggests that the numbers around 233,000 new jobs created in June. So now you could think about this number. If market will show better than these numbers, this will be positive surprise. But even if numbers will be released according to the expectation, that will be the positive by itself, because in this case it will mean that non-farm payrolls shows the stable data above 200,000 for the 6 months in a row. That will be really supportive numbers for the US dollar. So now, guys, I think that today it's better to do nothing on the gold market and just wait what will happen on the non-farm payrolls release. And on the weekend we will take the broader view on the gold, and maybe market will create some patterns that will be useful for us, and we will try to create the strategy for the next week, because that was really tough week, and I will not exclude that some investors could turn to the profit taking, because the plunge on the recent couple of weeks was really significant, and the spring of the sentiment on the market and the expectation of the Fed meeting on the data really was significant, and that probably demands some relief, psychological relief also. So maybe market will take some pause, some retracement or something of that sort in the nearest future, maybe even today after the non-farm payrolls release will happen. So let's see what will happen. But in general, guys, in the medium term, the recent gold market action suggests and confirms the moderate bearish sentiment on the market.